Okay, I think it's a little bit too bright, the table lamp, but okay, how do I get rid of that light? But I can't really help. Yes. Okay, just give me a minute. Let me adjust the table lamp. The table lamp is a little bit too bright. Okay. All right. Okay, that should be better. All right. Okay. Yes, slides last one. Okay. Yes, slides last one. So today's topic. Hello, everybody on YouTube. Today's topic is about a discussion or maybe even a debate of what I think is called a strong, powerful stock market rally, Christmas rally. Hi, everybody. It's controversial. It's something that a lot of people don't want me to say. It's probably something that a lot of people say, what if you're wrong, that kind of thing, right? Good afternoon, everybody. Hi, Cindy, Agnes, and Wen Liang, all good to see you. Han Ping, good to see you too. Zhong Ming, good to see you. Yes, Mrs. Lu looking younger and prettier. Okay. She's just right here. Yes, okay. Okay, make sure everybody like, okay, make sure everybody like, yes. Do you notice now on Facebook, you all don't get the alert, you all don't get the live alert so frequently? I don't know what the issues are, How many of you get a live alert? We always go live every day, At least YouTube, I think you will get the alert faithfully, but the Facebook one, you don't get an alert. Your beauty products work well on you, really? Okay. Just now I was on, you get message alert, okay. The YouTube one, you get a message alert easily. Is the Facebook one that you don't get the message alert. How many of you are facing this problem? Say me on Facebook, okay. You don't get the live alert. For those people, I was just in Swasu. I've been applying a lot of things, so my whole face is full of Swasu right now. Yes, thank you. All right, make sure everybody, yes, click on the like, okay. Yeah, so FB delayed alert, okay. Me no alert from Facebook, yeah, okay. Yeah, sometime yes, sometime no, okay. So it's quite painful. I don't know what the issues are. Yeah, okay. So hello, Edison Chi, yes, Jason, good to see you. Yes, okay. Okay, today is a hot topic. It's hot topic. This is very controversial. This is very controversial. So my topic today is on a powerful S&P 500 Christmas rally. Okay, and this Christmas rally is not what I say. It's by what other people say. Okay, at night mostly no alert. Walao. Okay, so maybe we gotta do something about that. I don't know how to do something about that. Okay. So S&P 500 has a powerful Christmas rally coming. No, Jumbo. No, people ask me at Jumbo. Hey, those on YouTube, can you please give a like, please? Yeah, I don't know why every time got to beg everybody to do that. Okay, it's an algorithm that if you click a like, more people get to watch it. Okay, I prepare a lot of effort into this. Okay, this disclaimer I'm gonna shout out. I'm not telling you to buy or sell. Okay, in fact, I'm not buying or selling. I'm just telling you what I read of the market and what I see on market. Today, the analysis that I do is to first analyze what people say towards the stock market. I'm going to give you my analysis of what's happening in the macroeconomic world, and I'll give you my conclusion at the end whether I think this market Christmas rally that people say is going to happen is in my opinion is it backed up? Okay, is it house sale or not house sale? Okay, cool. Do you have a lot of people on leave right now, or sorry, on traveling right now? Has the traveling season start? Okay, so if you are traveling, then you won't be able to see my live. Okay, but anyway, all right, cool. Okay, let's go. Okay, let's go. Okay. So first and foremost, the S&P 500 has been on a mini rally. Okay, mini rally has gone up quite a bit. It has broke through the 4,000 points. Okay, 4,000 points, and that's very good news. Okay, that's very good news, and I believe that this is in response to what people think is happening to the inflation. So let's not forget that this entire market crash was caused by inflation. And when the inflation goes down, logically, the Federal Reserve don't need to increase the interest rate so much. So therefore, we should see the stock market going the reverse. Okay, so let's take a look at this. This is a very important chart. Okay, the peak of the stock market happened around the early January. Okay, almost the start of the year. That time the stock market was at 4,800 points. 4,800 points. I want everybody to remember 4,800 points. Okay, and it went all the way down. Okay, to a low of about 3,500 points. Okay, so 4,800. My average is that I went in, I look at day about 3,800. So I'm already in the money. 3,800, 3,850 or so. Now we are staging a recovery. Okay, in between there were actually recoveries, what we call bear market rallies. Okay, this is the one I spotted, and then Jerome Powell, the Federal Reserve Chairman, I go and crash it. 真是的，气死我. Okay, so but the recovery from this point will be about 4,000 to 4,003. Okay, so it's not unthinkable that, to my opinion, we recover here. But let me talk about it. So those on Facebook, yes, slides +1. Okay, slides +1. And those on YouTube, please everybody give a like. Very important to me. The Nasdaq has staged also recovery. Okay, about 5% recovery on this month, but actually the Nasdaq is still a far cry from what it was. It's about 30% down from what it is now. 30% down from the peak, which is the early part of the year. So it has a lot more room to go. Okay, a lot more room to go. So some people say that, oh, the stock market is going to rally or not. Mr. Lu, you're not qualified to talk about this. That's probably true, but there's this fund manager called Tom Lee, okay, from Fundstrat, okay. He's an incredible stock market bull, and I'll answer your question later, okay. He's an incredible stock market bull. In fact, in the whole of the US investment world, during the crash, he and Professor Jeremy Siegel were the only two bull left. There's a little bull like me called, Alex, good to see you. My good friend, yes. There's only two big bulls, bulls in people who are bullish. There are only two big bulls left that is saying that the stock market rally is going to rally at the end of the year, and that was a time when market crash and crash and crash. I believe them. I'm in the same voice, so therefore I've been going the market in, and some of you have followed me, some of you didn't. That's okay, but let's take a look at this, okay? So Tom Lee actually said that the stock market could soar to a new record in another 1982 style vertical rally. Vertical rally. It's not like a slow rally. It's like a shoot up now kind of vertical rally as inflation continue to ease. Okay, and he actually said that stocks could rise abruptly and cause the S&P 500 to hit 4,400 to 4,500 by the end of the year. We are now at 4,000 points. Remember? Okay, so he in his opinion, he thinks that he can hit 4,400, 4,500. Now, I think Professor Jeremy Siegel from Wharton University didn't actually say which point. Okay, didn't say which point, but he also believed in the rally. Now, someone said, it seems too good to be true. Well, okay, let's take a look at the underlying reason, and I'm gonna let's look at history first, okay? In the history, a similar event happened. Give me a minute. A similar event happened in 1982. Let's look at 1982, what happened. Because if 1982 were to happen again, okay, if 1982 were to happen again, let's take a look whether how true it will be, okay? So this is 1982. Okay, this is 1982. You all can see now. Wait, I darken it a little bit. Okay, can see? Now you can see. In 1982, early of 1980, the stock market hit a peak of 140 points. Okay, at the time S&P 100 only 140. Then it crashed and crashed and crashed and crashed and crashed. Why? Because the inflation was so high. Paul Volcker, the Federal Reserve Chairman, then came in and spiked the interest rate up to the moon. It's like 18-20%, that kind of thing, and caused the entire stock market to crash and caused a global-wide recession, basically just like what we're experiencing right now. Okay, so this crash happened. Okay, and it was a painful one, right? It's a very painful one, and it bottomed here, and somewhere around here, actually, the inflation start going down already. And the inflation was a high of close to 20% or so. It declined somewhere around here, was about 6% or something like that. Okay, and then the whole stock market start to rally. Okay, and take note, from this point of low to reach this point, it took only 2.8 months. 2.8 months. Okay, for this point to this point, the recovery. This is what Tom Lee says, it's like almost like a vertical recovery. And the best part is, it didn't stop here. It went up and up and up until here. So from here, okay, it was 1,000. So it was a 100 point. It went up to 170 points. Okay, can you imagine? Not only did it not stop, not only did it broke through the previous high, it went from strength to strength and went on. Okay, this was 1982. Okay, 1982. So it's very interesting to see this phenomena. So basically, if inflation softened faster, that's what Tom Lee says, faster than the Fed expect, okay, which is also what consensus expect, this could shape up to a 1982 moment. In his view, Tom Lee says that the S&P 500 could rise to 4,400 or 4,500 by the end of the year, a 12-point rise from the current level. Okay, so how many of you believe that this will happen? Okay, at this juncture, later we ask this question again by running through analysis. Okay, how many of you believe that this will happen? I want to say me, if you believe it. And if you don't believe this will happen, say not me. Okay, say not me. Okay, that is yeah. So who? Okay, say not half me. Okay, me or not me. I want to hear. Okay, everybody please contribute. Okay, this poll is important because if everybody believes, then it will happen. If everybody don't believe, then it won't happen, because the stock market is a reflection of everybody's psychology, right? Okay, so I can you all send in your, I want to see everybody's comments. Usually end of year more volatile. Not me. Okay, don't jinx it. Happen is good. me. Okay, not me. Hey, Facebook, nobody contributed a single word. Okay, Facebook, can you at least tell me whether you believe or don't believe? It doesn't matter. It's just a belief, right? There's no price or things like that. Okay. No, it's either you believe or not believe Tom Lee that 4,400, 4,500 points will recovery. Okay, hi Jennifer, good to see you. Yes, not me. Okay, NG is the first me on Facebook. Okay. Okay, not me. Okay, Facebook, anybody? NG, you're the only one who commented on Facebook. Yeah. Okay, me. Okay, so on YouTube, it's about really almost like 50-50. Okay, almost 50-50. On Facebook, only NG replied. Okay, so let me give you right now the signals. Okay, let me give you right now signals. Let's take a look at what's happening around the world on inflation, shall we? Okay, let's start from home, Singapore. So Singapore has came out the news. Singapore core inflation eased for the first time in 8 months. Singapore inflation rate is coming down. That's good news, right? Singapore inflation rate is coming down. Okay, Fast and Furious, and that's not Fast and Furious, ease marginally, okay, not Fast and Furious, but ease is coming down, and that's a great news, that's a great news. Singapore core inflation rate eased from 5.1% eased to 5.1% in October, first drop in 8 months. Okay, so this is a first good sign. Now Singapore, all our prices are imported. Okay, we import our inflation, and the fact that if the inflation is coming down simply means that the external prices coming to us are going down. Okay, so this is a fact. Now some country I don't quite trust their inflation rate, but this one I really trust. Okay, so for Singapore, the core inflation, okay, I'll read to you, it's a bit too small. The core inflation, which excludes the cost of private transport and accommodation, reflects the expenses of Singapore household more accurately, eased to 5.1%, lower than the 5.3% in September. Okay, and the overall CPI, okay, came in 6.7%, and that's lower than the September 7.5%. So from 7.5% in September, it came down to 6.7. Can you see it's actually quite rapid, Yeah, it's quite rapid. And that's a that's a pretty good sign, okay? So that's a pretty good sign. Let's take a look at the US inflation rate. How about that? Okay, the US inflation rate. The US inflation rate, okay, Goldman Sachs expect the US inflation rate to decline in 2023. And in fact, the US inflation rate is coming down so rapidly that the US dollar has tumbled from a 20-year high. The US dollar hit a peak versus a Sing dollar. Versus Sing dollar, it hit a high of $1.44. Now it's at $1.38. It came down quite a lot, Yeah, okay. So it came down quite a lot. So we should expect the inflation rate to now decline pretty significantly. Now let's take a look at other parts of the world, shall we? Not just take a look at let's not just take a look at US. Let's take a look at the Euro area. So the Euro area, okay, Euro area inflation likely near its peak. This is by ECB's vice president, Europe Central Bank. So not only the European Central Bank also is in a position that inflation has hit the peak. Okay, we do see a lot of all these signals coming. So Singapore, okay, our inflation is coming down already. US inflation hit a high of 9.1, now is 7.7. And Europe, which is very high, is also coming down. So globally, inflation is coming down. That's almost factual, barring unforeseen circumstances. So if inflation is coming down, what do you think will happen to the stock market? What do you think will happen to the stock market? Anybody? Up or down? Okay, stock market up or down? Right? The inflation is coming down globally. Okay, that is a fact now. Globally, yes, Zen, you're right. Arjini, you're right. Anna, you're right. Angela, you're right. Yeah, ups, right? So it is. So let's take a look back at the Volcker's bear. Okay, so this again was stock market in 1982. In 1982, it crashed, and when inflation came down, okay, it came down. The stock market rallied a humongous from 100 points all the way to this rally. Okay, it's not a small rally. We are not talking about a small spike. Okay, so let me read to you. After bottoming out, the stock market fully recovered to the peak in just 82 days, 2.8 months later. From here to the previous high, okay, it just took 2.8 months to recover. 2.8 months, right? And then after that, the entire cycle lasted 1.9 years. That means from here to here, 1.9 years. And it's a very interesting to know that the decline is slow and painful, but the recovery is a sharp, massive near vertical rally. Okay, and in fact, after recovery, the market continued an upward trend for an additional 11.4 months. Eventually, it peaked, okay, 70% from the bottom, right? And by the time the stock market peaked, inflation just reduced to 2.8%. Okay, so and there wasn't, apart from the massive rise in inflation, okay, the massive rise in interest rate, the inflation came down. The government didn't really do any other thing. Now, what's the story here, guys? What's the story here? This 1982, 1982, I'm only 10 years old. I don't remember anything of this. I only 10 years old. 1982, any one of you are not born yet. 1982 got no computers to trade with. People are not that familiar. There were no precedent. They were on experimental ground. This is the year 2022. They now have the experience of 1982. If Mr. Lu can see this, you think the rest of the world cannot see this, right? Okay. This 1982 experience, now people can see. Even Jerome Powell can see this. In 1982, this thing happened at a massively high rate now. Those days don't have internet, don't have computers. Now we got internet where news is is issued to everybody. Will this now be faster than 1982? Not. Imagine 1982 now happen now. The recovery might be even stronger and faster. Michael, you were 8 years old. Okay, I was 10, so you're a bit younger than me. Okay, so the difference between the past and now is the market then were backward looking. Now market tends to be current or forward looking, right? Now, yeah, Jason says 1,000 times faster. Okay, so you got to decide for yourself whether this will happen or not. Now, this is now Tom Lee's analysis that he thinks that he hit 4,400 to 4,500. I don't know whether we hit 4,500, okay? But I am leaning now to the same conclusion that the stock market is going to have a powerful recovery. It's my view. I can be wrong, okay? I can be wrong. So if I'm wrong, don't say, Mr. Lu, you say you're right, I buy, I'm going to lose money. So let me just say this is my conclusion, okay? Barring other unforeseen events, okay? Barring other unforeseen events, the fall in inflation globally is imminent. It's going to happen. It's really happening, okay? Fall in inflation. Jerome Powell and the Federal Reserve will continue to be hawkish. They will find every single excuse to tell you that the inflation is still bad. They must increase their interest rate painfully again and again and again. They must. Because if they don't do that, if people's sentiments suddenly change and go all out and spend, then inflation will spike up again. So it's their job to tell everybody, I'll be a ghost. I'll be a monster. I will continue, this is 5-10 reasons why, the inflation is still bad. I'm going to still whack with high interest rate. Okay? So they're going to do that. So mind you, in December, we'll see that the Federal Reserve will continue to be hawkish, but they cannot play bluff forever. They cannot, you can imagine you hang someone, right? Scare someone as with a ghost, right? You scare one time, very scary, right? If the ghost keep coming out every day, one box towards the ghost fall on the floor, right? So bottom line is, you cannot play bluff forever. Yeah. Yes, you can increase interest rate, But people are not stupid. Analysts are not stupid. They can tell. Yeah, you want to cry wolf again and again, play bluff, to say that what inflation must continue. The underlying situation is still bad, still bad, still bad. Scare you. Play bluff, play bluff. Okay, so therefore, the problem is now a lot of people are confused, including analysts, because the whole stock market now has two effects. There is a hike in interest rate causing the entire economy to, whoa, there's a mosquito there. Okay, causing the entire stock market to decline. Okay, but there's also right now a problem because there is a recession. Okay, there's a recession, but the recession, okay, will cause company profits to go down. So company profits go down, stock market should go down, ma. But inflation go down, stock market should go up. So which effect stronger? The same thing happened in 1982. The same thing happened in 1982. And I don't think that effect of the recession causing the stock market go down ever even impact it at all. So therefore, my take is a lot of people will remain confused, and so suddenly stock market go up, but stock market go down, stock market go up, stock market go down, and things like that. So therefore, my leaning is the market will continue in a volatile recovery. Okay, the stock market will recover in a volatile way. I do hope you will hit 4,400, 4,500. I've got a lot of money in the stock market right now. Okay. But I think there are grounds to believe in this Christmas rally. Okay. Barring other unforeseen circumstances. Suddenly, Russia go and launch nuke on Ukraine, and then the West strike back, in a massive way, then there's Armageddon. That's a different story. Barring those things from happening, the market, in my opinion, will chiong. Okay? Yes. We shall see. We shall see whether I'm correct or not. Okay, we're only about less than 1.5 months away. Yeah. Okay. So yeah. So how many? So now that I provided analysis, how many of you believe that we're going to have a Christmas rally? Say me. And if you don't believe, you just say not me. Let's hear it right now. Okay. I want to see everybody, especially on Facebook. Facebook got no response one. Why so sian one? Yes. Yeah. Okay, me. Okay, Eddie Lau say me. Zen Sui. Angie, you say me. Okay. Okay. Beeling said me. Okay. Anna say me. Okay. KB say me. Okay. Leonard say me. Yes. Okay. Okay. Levy say no. Sorry. Yao Tian say not me. Okay, that's fine. Alex, Chinese New Year rally. Okay. Me. Okay. So. Angela say me as well. Okay, so now roughly, just now was 50-50. Now at least I provide analysis. A lot more, maybe about 75-80% believes in it. Okay. Yeah, Danny say I believe, but it's a less steep slope. Well, we shall see. Okay, we shall see. All right, cool. Okay, so I hope that this analysis that I provide for you will set the stage. Okay, for what I think will happen to the end of the year, okay, and thereafter, then we'll see if the vocal rally is going to happen from 1982 to now. I think I'll be very happy. I'll be very, very happy, and because I've dumped quite a bit into this stock market. Okay, cool. Okay, we shall take some questions, shall we? All right, cool. Anybody have any questions? Okay, anybody any questions or comments? Okay, go up to 4,200, then go down lower and low. Well, maybe, I don't know. Okay, yeah, someone at least at least I have grounds. You use history and grounds and analysis to say why I think will go down and go up. Okay, yep. So So I provide some real history behind it. So I hope there's a basis. Now, history may not repeat again, right? So yes, okay. How long more will interest rate be so high though? I think it will remain high for quite a while, at least until the middle of next year, yeah, or maybe even the third quarter of next year, before it start to inch a bit lower. If stock market rallies, what else will go up? That's a good question. I think stock market will rally first. I think within the bucket of stock market, there's the S&P 500, there's the Nasdaq, and all this. I think actually someone someone actually say this, which I thought was very interesting. If it goes out, should we cash out? So after you cash out, what are you going to do? What are you going to do with the money? Right? Remember, right? I'm in the opinion that that the stock market you is not a buy sell kind of a casino. No, I believe in buying and holding it strong. Yes, I think I've done this analysis for you before, right? Let me say, okay. Let's so I've done it before. I'm going to do it again. That day I just did it to a CFO to let him understand, because he asked me the same question: will stock market go up or go down? Okay, so this stock market rally, okay. So the average stock market return, I'm gonna hold it until I'm 70 years old. So I got 20 more years to go. So let's say S&P 500 return me about 10%. Okay, so be 1.10. Remember I've done this times 2 years, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 20 years. So again, over 20 years, I put in $1 million, it becomes 6.7. Okay, in this crash. But if indeed the stock market rally is going up by that same magnitude as what we saw, don't need go up by 70%, go at 50% enough. So you'll be just now 6.72, okay, times 1.5 million, you go to 10 million. So basically when it jump, I keep it there so that now there's a bigger snowball to compound. You understand? Okay. Angela said, do you think China will do away with zero COVID amidst protesting and stock market reaction? I think I read some report and say that the China the fight against COVID is now to the point of no return already. Cannot fight anymore. Yeah, it just can't fight anymore. Okay, so you just can't fight anymore on this. Yeah, so no, I think their lockdown is going to be futile. Yeah, which industry will benefit the most in the recovery? High tech for sure. High tech, yes. Okay, I think there's some debate whether cash out and buy property is a good idea. I'm not too sure about that. Okay, yes. With US tax more than 60%, how does this change things for you? So I'll try to put more outside US in the Ireland domicile kind of tax, Ireland domicile kind of funds here. You get allotted on TV? 没有啦. A lot of low ballers. I go and put 4.2%, it came out 3.89 or something like that, I can't remember. Why you gonna bid so low? If you want that low number, just go put a fixed D lah. Spoil market, right? A lot of people. Okay. Mr. Lu, I see some analysts saying that the next crisis will be on deflation plus recession around mid 2023. You'll be very bad by stock market. Take a look at those people say never take a look at 1982. 1982 also like that, what? 1982 also same thing. Yeah, even worse. Right? So, what is that? And it didn't, the recession was even worse, right? So, yes. Any penalty when a TBU application rejected because low ballers? I don't think it's a penalty. I don't even know whether it's a fee. The money just come back to you. Okay. Yeah. So, okay. If we are not going QE, stock quite tough to go higher. I'm not too sure about that. In 1982, they don't have QE one. Okay, the stock market rocketed up as well. Right, so I hope you all can see where I'm coming from. Okay, so you see the analysis I give has reasoning, solid stock market reasoning, and it's not house logy. Okay, real stock market history plus what is happening right now. Can it not happen? Yes, it's possible. It may not happen. Okay, but let's talk about chances. Okay, talk about chances. Now, already I don't need to react because I already reacted over last February until now. I already invested where I want to invest already. Okay, but for me it's just a waiting game, right? Okay, so let's say it don't happen, but it will surely happen. The S&P fund has recovered almost through every crisis. Okay, so it's nothing to be afraid of. But anyway, I thought it's interesting that Fundstrat Tom Lee actually came to the conclusion that it will come out to be a 4,400 to 4,500 points. We're now at 4,000, so it'll be quite a big jump. Okay, we shall see, right? So if that happen, yeah, maybe we should all go out for coffee or something like that. Yeah, cool. Okay. So with this, everyone on Facebook, and YouTube, remember click or like, and click follow, and hit the bell for notification. Yeah, so that you'll be notified of subsequent live streams. Okay, cool. Okay, so I'll try to do a bit more. A bit more of this. I'm watching the market very closely right now. Very more excited. I think a lot more optimistic about the current situation on the stock market. Now, economy may be another matter altogether. It will take a longer time to recover, but as far as I understand, the stock market will be 6 months to 9 months ahead of the economy. Okay, thank you. Okay, thank you. I hope that you have a great Sunday night. Okay, cool. All right, good. Okay, so let me off on YouTube first. Okay, and for those people on